Hey everyone, Chris Vermeulen from thetechnicaltraders.com. It is Sunday afternoon, been a long stretch of great presentations, lots of exciting forecasts and predictions. And I wouldn't say the economy is exciting so much or really to be excited about, although it is very good, favorable for metals. So let's dig into the shorter term charts and the technicals and what they're pointing to. I know there's a lot of big projections and I see much higher prices for silver as well, but let's take a more kind of simple approach. Look forward, not quite as far. Let's take a look what to expect over the next few weeks, over the next few months, maybe over the next year from now, which will walk our way up to those bigger targets that we're all really excited to see get hit. Now, this is a chart of silver from back in early 2000s. And what we're going to use here are a couple of different things. We're going to use cup and handle formations. We're going to use Fibonacci extensions. And we're going to use pattern depth, just using a simple box on the chart to predict where price is going to go next. So let's start off with Fibonacci. Actually, we'll start off with box theory first on this play. So the way the box theory works is simply you take the high, once price starts to break out above this previous high, that's when you can get really excited that it's in a new major uptrend. So once we get to one of these green bars, this green bar here actually, that's when we're like, okay, it's breaking to the upside, it's in an uptrend, how far is it going to go? And so we can take the high from this pattern and then you take the low and you can just carry that forward. And it gives you a simple range. This is the range, the volatility within that zone. The longer something trades sideways, typically the bigger the move pending. And what we're looking for here, if we were to just copy this chart, this box, and paste it on here, we can get an idea where the next upside resistance level is going to be. So based on this pattern and breakout, we're looking for a move to the upper end of this box. And when you have this type of pattern, which is it sells off and then it kind of flags out, you can argue this is a bull flag. You can argue it's a cup and a handle formation. I like to look at it kind of as a cup and handle formation on the monthly chart. A pattern this big that takes over a year to unfold is very powerful. A year and a half long pattern can pack quite a punch when it breaks out. And when you have a cup and handle pattern, you can usually see 200 to 300% of the move. That's the depth of that range. So if we were to take this box and throw another one on here, here's a 300% move. So you've got 100, well, it's a 200% in total. 100, 200% move. And then the market started to put in these big tweezer candles, these upper wicks, where price rallies up, gets sold back down, rallies up, gets sold back down. And so this is a simple way to get an idea of some upside levels where you could be mentally preparing if you're a long-term investor that, hey, we've just hit 100% or 200% measured move. Based on this pattern, we could go into a consolidation for a year or two. These are big patterns. They take a long time to play out. So that's kind of where that kind of theory comes into play. It gives you a really good idea. Typically, we're going to see a 1 to 200% move, but the bigger the pattern and the longer it takes, the more times it can continue to rally to the upside. So we saw this continuation move and then it flagged out sideways in another range. So it's starting to break out. We actually had a false breakout here. You can see this long upper wick and then it sold back down. But now it's threatening to break out. The next bar, we start to break out. The next bar, we clearly break above this previous high. So now we're actually having a close above this high. And so now the question again is, okay, where is the upside target from here? And once you've got a key previous rally and pullback, you can use Fibonacci extension as well. And I really like Fibonacci the most out of all the patterns, but I do like it when multiple strategies line up. So we can go from this previous low, way back over here to 2004, to this rally up, and then the correction. And if we carry that forward, it's going to tell us where we should see the upside move in silver. So we're looking for silver to come up to this area. If I move this over around $19, that's a 100% measured move. And if we were to box this pattern as well, let's take this high and down to this low. And then we'll copy this pattern and throw it on top. This is very, very basic technical analysis, but it works exceptionally well because the markets move based on momentum. So we have got an upper range somewhere here around 20, 60, and $19 an ounce. So if it hits these levels and you're a short-term trader, these are levels where you start to tighten your stop or you start to pull some profits off the table. Let's continue to see what happens. So it ended up hitting both of those targets, big reversal to the downside. And then it continues to consolidate. And then we saw a big breakdown. And that's the end of that trend. And now it's making a series of lower lows. We have broken this significant standout low. And it has a big reversal. So now you really have to let price do its thing. Unless you want to short silver when it is in a downtrend, especially on the monthly chart, making lower highs and lower lows. Here's a lower high. Here's a lower low. You really want to just sit on the sidelines. And then the market really consolidated, did its thing, very volatile in this range, but struggled for a while. And then it worked itself back up. It got all the way back up into these levels here. And then we started to see price break out. So here's the first monthly bar. We broke this. So now we can take the box theory. We can take the depth of this consolidation and we can stack it on to get an idea where this pattern will be. Now keep in mind, this is a 2.25 year pattern. So it is a big pattern, which means it's got lots of potential to have a huge move to the upside. So if we just stack this on top here, you can get an idea of where silver can go. So this was the first level that could have hit. If we stretch the price down and we throw another one on here, you can see we had another level, and that was 2 times the distance to the upside. Now I'm just going to rescale this, zoom out a little bit. And if we were to take this, once we got into this downtrend, we don't have a previous point to grab to do a Fibonacci extension. And this is actually seen better on the weekly chart. If we go to the weekly chart, if this chart will update to a weekly, here we go. If we go to a weekly, we can grab our significant low, which was back over here. And then as it started to break, once it broke out of this high, the first significant pullback is where we can grab the top, and then we can grab the low. And you really generally need 3 months or so, 3 bars to kind of give you a standout low. You'll notice a lot of times you have 3 bars or 6 bars or 4 bars. A 1 bar pullback, something like over here, doesn't stand out. You really need something that, pulls back on the chart and gives you a standout low. And then when you carry that forward, you can get an idea of where price should go. So based on this theory, we've rallied all the way up. We finally hit resistance level. It had a significant pullback. And based on this pullback, when it starts to break this high again, it has an upside target of 48.90 up there. And that's where it ended up going and reaching. It was a box target, a top box target for a 2% move. And that's the nice thing about these great big cup and handle formations. Generally, you see a 200 or 300% move. 100% is usually fairly quick, and then you can see the other gains happen shortly after, and they're usually some type of parabolic move. When you see price running full speed up to a target, especially if you got 2 targets, you got to be really aware that price could pull back. So let's just scroll forward here in time. More or less the market put in a top. You can use the same theories. I've got Fibonacci 100% measured moves, these orange lines on the charts, and silver pretty much walked itself down. Just one wave after another. And now we are in this, it's formed this giant basing formation. We are in this explosive move to the upside. And it is pointing to much higher prices. So if we were to just go back to the monthly chart, I'll give you a bit better view. Here is the monthly view. Now, if we were to take the box theory on silver of where it could go next, from the high to the low, take this and simply paste it on here, we can get an idea of where the upside target is for silver longer term. We'll have to squish this chart way down. You can see there is an ultimate target. Now we're looking at this pattern here is 9 years, 10-year pattern. We're not even close to breaking out to these highs on silver yet. So we still have a lot of ways to go before we get up to those levels. But when we do break that, the size of this pattern, like I said, the longer something takes, we're not looking over here at a 1.5, 2.5 year pattern. We're looking at something, 5 times bigger than that. Very, very big pattern. So we could see this potentially stack up in a much, much bigger way to the upside, which a lot of speakers over the weekend have talked about these huge prices, 2 or 3 times here. It puts us up into the $100 and beyond range, which is extremely exciting. But let's just zoom back into the shorter term and get an idea of where this recent price action is most likely to go. If we go to the daily chart and we take this current pattern, which is this standout low from March, the recent kind of washout capitulation high over here at around 30, and then back down to this reaction low and carry it forward, we can get an idea of where we should be heading over the next, you look at these charts, this is a 1, 2, 3, 4, 5 month pattern. We're at the halfway mark. A flag is usually the halfway mark. So we're still looking at several months, 4 or 5 months. I think we could see silver up to around this $41, $42. Remember, when it gets to a 618 level, this is where it's going to have its first kind of significant pullback and hiccup. It could pause there for several weeks or months, but then it should go up. If you see a pause at the 618, some type of pullback, we're pretty much almost always go up to that 100% measured move. So it is a good sign if we hit 34, 35, pullback, and then it should continue to extend in the future back to 41. So overall, that's kind of where we're looking. If you look forward 4 or 5 months, $41 an ounce is a very sustainable type of rally. Now, if price was to just explode and go straight up here, that means we're most likely going to see the price come straight back down. If you look in history, whenever you see price go straight up, let me just rescale this. Whenever price spikes straight up, where it goes parabolic, we usually see it come straight back down. It happens with most of these very sharp moves. Almost every one of these sharp rallies over the last 9, 10 years ends in a sharp wave of selling that's bigger than it started. Just like the sell-off in March, something that goes straight down will come straight back up. That's just the way kind of reactions work in the market. So overall, we want to see this consolidate with a nice stair-stepping pattern going higher. And we're looking for $41 over the next 4 or 5 months for silver. And then we're going to be looking at this upper level around 50. If it can break $50, then we are potentially going all the way up to this 90 mark, 90 or 87 and change. So that's kind of where we are, what to expect. I'm not expecting silver to go completely parabolic and take off. I think we're going to eventually see some type of equities bear market take place. It could put a bunch of pressure on metals and miners and pull them back and trade them sideways for a while. This is a bit different scenario than what we saw in 2008, 2009. We've got fiscal stimulus that's actually really good for metals, so they might hold up very well. The other big factor here is going to be what the US dollar does. If you look at the US dollar index here, it's putting in a bottoming pattern. This is 3 surges to a low, and we're starting to move higher. This is very close to putting in a significant bounce somewhere up into this area. Rising dollar will most likely put pressure on precious metals. That being said, when people are very fearful, we've seen the dollar move up, we've seen gold move up together, and we could see them both be a safe haven together at this point. But keep in mind, metals could still be under pressure, and silver could pull back to $22 an ounce and still be very bullish. So if it does pull back, when you look at silver, we've got this really significant resistance trend line. We got this breakout zone here. If I can get a tool. We got this breakout line there. We had the real significant breakout from the 2016 high. This was the line in the sand. that triggered all the short covering. So this one here was kind of the warm up. Like we're actually starting to make higher highs. We've got very strong momentum. Once we broke this 2016 high, that is when big shorts came in. The big shorts had to cover, and we're still working that off. The market is still very volatile, and I think there's a lot of unwinding going on. And we'll see how things play out. But we could see silver work itself back and fade down if the stock market sells off to potentially 22, which would be a very bullish sign. The longer it takes to get to 22, the better. And then it'll actually have a more sustainable run going forward. Anyways, that's it. Hope you guys find it a little bit useful, and keep your eye on that 22 as a really critical buy zone, investment level. And that 41 is a level where we're probably going to see some big selling step in, and price could consolidate for several months or longer at that level. Anyways, take care.